Hey everyone, thank you for coming back to the Proof of Pain podcast. I have James here as a guest today. He's a UK podcaster and Bitcoin adoption advocate. I've been a big fan of his for about a year now, I think, is when he started coming on the scene. And he started talking about Bitcoin, but also smarter web. So I figured I'd give the microphone over to James and he can give a little bit of a background on himself and how he got into both Bitcoin and the Treasury companies.
Okay, cool. I'm much more used to being in your seat than this one, but let's give it a go. Um, so yeah, Bitcoin. I actually heard about it really quite early on. Um, I want to say 2011, and me and a few guys at work were kind of trying our hand at mining it. Didn't really know anything about it. Didn't believe in it. Just kind of thought, well, this is pretty cool. And I was into tech, so we had a bit of fun. But that was kind of it. It went back in a box, and I forgot about it until 2017. And I have to admit, this is my altcoin phase. I think a lot of Bitcoiners have been through it. Maybe not all of them, but I had to endure that. And I wasn't sort of buying and investing and trading and stuff like that. I was GPU mining. So I had rigs of like 6 GPUs per rig and had a whole bunch of them. And I was mining altcoins, but I was getting paid in Bitcoin. So it was really basic. You could buy these kits from China that you kind of screw together that you could fit your GPUs on. And I was buying like secondhand motherboards off eBay and trying to source graphics cards from all over because there was a bit of a shortage at the time. And it was, it was good fun, and it was particularly good fun in 2017 because everything was going up. I think at the start of the year it was $1,000 a Bitcoin roughly,
Yeah.
and by the end of the year, around Christmas time, it was best part of $20,000. And it was like, this is great. This is going to go on forever. I'm
Yeah.
printing money. I'm having the best time of my life. And then 2018 turned around, and I can't remember the exact dates, but it was something like Bitcoin lost nearly 70% of its value in 8 weeks, I want to say. And it was just like, oh, this is this is painful. Um, and I was still mining because I was like, it's going to come back. It's fine. Not a problem. And it didn't. And electricity prices in the UK are insane. They're even more insane now, but they were still bad back then. And so, yeah, it just came to the point where this was not economically viable anymore. Switched off the rigs, sold the graphics cards, and went on my merry way again. But the difference this time was that I actually kept some of the Bitcoin. I hadn't. I wouldn't say I was a Bitcoiner, but I had got to the point where I felt like, okay, there's enough kind of people and interest in this that it's worth keeping some. Um, and hopefully one day it'll be worth, whatever. And my stance has changed a bit since then, but that was kind of the thinking at the time. And
Yeah.
then sorry.
No, I was going to ask if you remember what you were mining because I remember back then it was mostly like Ethereum, Zcash, those kind of things.
So it was Monero,
Okay.
was the one that I was mining. So I managed to lay my hands on a bunch of graphics cards that were particularly good at mining that. There was a platform called NiceHash where you basically you supply the hash rate and other people buy it off you or rent it from you, and you get paid in Bitcoin, and they get whatever the rewards are that you get from mining. And so I was kind of just um, putting my rigs on there, and people were buying the hash rate. and it was almost always going to be that one was the most profitable one for me. So that's what I was pointing at.
I do remember Nice Hash. I think there was a couple other ones. So other people are just basically renting your hardware,
Yeah,
and then you
it's
just
kind of
take a
like
percentage.
it's almost like decentralized cloud mining. Is kind of the way I think of it. You just point your rigs at a server or a pool, mining pool, and you get paid for that hash rate that you supply. So yeah, it was
Yeah.
pretty cool.
Well, at least you got paid in Bitcoin. You kept at least some of it. Did you just forget about it for a couple of years? Did you study back then and try to understand it, or did you wait until the next bull run, or how did that work?
No, so yeah, this is kind of where I'm maybe different to your average Bitcoiner. I still didn't get it in 2017. I just thought I'll hang on to it just in case. Um, Literally locked it away, forgot about it. And I hadn't studied it. I didn't, I knew there'd only be 21 million. I got the basics of it, but I didn't, I don't think none of it twigged. None of it said to me, oh, I didn't have that orange pill moment. Um, and, there was a lot less content around them. So there was a lot less like YouTube videos and, X was, well, Twitter as it was. I didn't get involved in any of that, so I don't know whether it was around or not. But so yeah, I kind of just locked it away, and then I genuinely didn't look at Bitcoin until 2024,
Wow.
after 2018, because I started a family. I was busy doing that. I changed careers, had a lot going on in my life, and yeah, I just thought, you know, I was busy. I didn't even. This might be wild to hear, but I didn't even hear about Bitcoin having a bull run or anything. There was no headline that got my attention, or anything to make me want to check. So maybe I just dodged it, and I think quite fortuitously, really, because it meant that I just sat that one out.
Yeah.
Um, and then 2024 came around, Trump getting in, and it was kind of like, oh, sugar, this thing's back. I'd better go check that it's all still there and all that kind of thing. And I thought, okay, right, now's the time to actually properly learn about this. So I kind of went and did, Michael Saylor's recommendation, 100 hours, which led to many hundred hours more.
Yeah.
And yeah, I read a few books, and the one that particularly I enjoyed and kind of hit me was Lawrence Lepard's book, The Big Print. Um, yeah, it kind of, I was like, this is the book that normies need to read. They need to be like one level above normie to want to read it and actually want to understand it and want to get it. But it's as plain English as I think you can explain the topic.
Yeah.
And so I'm grateful for him for writing it, because that I think that was kind of like the not the straw that broke the camel's back, because that's kind of like the wrong analogy, but it was the one that made the penny drop and
Yeah.
and stick. So yeah,
I definitely read that book. He does such a good job, and the nice thing about it is that he doesn't. It's almost like the Bitcoin Standard, where he goes into a long intro, and then towards the end is where okay, this is the problem. Here's the solution. He provides multiple solutions like gold and whatnot. When you try to orange pill, it's so difficult because people have to be ready and open and be willing to be wrong. It sounds awesome when Bitcoin's at 126,000 or whatever it was, and you're like, maybe now's the time to learn.
126K. Like, people's instant reaction is, "Oh, I've missed it." They don't want it at the top. They don't want it at the bottom, and that's fine. They're not ready. And one day, my belief is that the world will get to a certain point where people will be ready because they'll have to be ready. But until then, there's kind of two groups of people in my mind. There's people with like a fixed mindset of this is how everything works. This is how it's always been done. And so just keep treading the path and all will be fine with the world. And then there's like the growth mindset people who are interested, they're intrigued, they want to learn. And even if it's not, they stumble across Bitcoin, not because they're interested in Bitcoin, but they've got that mindset, then they orange pill themselves. That like, you don't even need to intervene.
It comes from two angles. Either you need, I think Michael Saylor has said this, either you're just naturally curious and you just stumble on it and you want to learn and you're eager to learn. You're that personality. Or something went wrong and you're trying to find a solution. Those are the two people that are the easiest to orange pill. If you try to force anything on anyone, from my personal experiences, you're just wasting time. And it's actually worse because you might even turn them away, because when it does go up, it's almost like I told you so, and their ego gets in the way and they want to, they don't want to admit that they were wrong. So it's the idea of Bitcoin for me is helping people, right? There's nothing selfish about it. I'm not making any, well, I mean, I guess if everybody adopts it, then the Bitcoin goes up. So I guess there is a level of selfishness there. But really, for me to have any impact, it would have to be, not even Michael Saylor has that much impact if you really think about it. It's more of trying to educate people and try for them to understand, hey, look, the money that you have is losing value. There's multiple solutions to this problem. And this, in my opinion, is one of the best, if not the best solution out there. It's such a big topic that's why it's so nice to have a book like The Big Print or The Bitcoin Standard. But the problem with the Bitcoin Standard is it's in the name. And people have such, from what I've seen, that just the word Bitcoin, their eyes roll over, or they just don't want to, or they don't even understand it. They think it's going to be too techy. It's not for me. Or, I heard about Bitcoin before. I don't want to deal with this. This is just some scam, some this or that. So that's the problem with the Bitcoin Standard. The name itself could throw some people off. Books like The Big Print, I think, do a better job in that sense because it's kind of like a sly, roundabout way of introducing it.
Yeah, and there's a great video. Have you heard of a guy called Joe Bryan?
Yes.
Yeah.
That's a great video, yeah.
His video, What's the Problem? Which is, I think the channel on YouTube is Sats versus Fiat. If you haven't, anyone watching this, if you haven't seen it, go watch it. It's brilliant. It takes like 30 minutes of your time. And he does an excellent job, and his voice is so calm. It's just a joy to listen to.
Yeah.
And he just takes people through step by step, kind of what's wrong with fiat money. And at no point, he mentions Satoshis, but at no point is he talking about Bitcoin directly. And then just right at the end, it kind of all comes together. And I think it's just so incredibly well put together. I've been lucky enough to meet Joe a couple of times now.
Wow.
And arguably, I'd say he's got to be up there with one of, if not the nicest person in Bitcoin. He's just such a nice guy, and has time for people. He wants to talk about Bitcoin. He wants to talk to people about Bitcoin, and he wants to just talk to people. So yeah, great guy.
That's one of the better videos out there. For me, it was the old Antonopoulos videos. But like you said earlier, there weren't that many. It was really just him, Roger Ver, which obviously, he's switched sides. There were a couple other people. Who was great? June Seth. I think he had one of the first, if not the first, Bitcoin podcast. So June Seth, I think it was called Bitcoin Uncensored. I wasn't there for when it first started, but I was able to find some old recordings of it. You're like this fly on the wall of like a past era. You wish you could go back and make just a couple clicks. Just a couple clicks would make such a difference. So 2024, you dug in. Actually, end of 2024, beginning of 2025, you dug in and you started understanding Bitcoin, and it clicked. How does that go from that orange pilling moment into, I think, your first foray into the Bitcoin Treasury space. How did that happen?
The sequence of events was kind of, oh, and I've got this money in my pension. What can I do with that? How can I get some kind of exposure to Bitcoin with that? Because I'm not a wealthy guy, and a majority of my paper wealth is in my pension. And so it was like, I need to get that exposed to Bitcoin somehow. So I came across MSTR, which I think, that's kind of obvious, especially having watched however many Michael Saylor videos as part of my hours. It was like, brilliant. Okay, so invested in that. And then the search quite quickly went on to, why isn't anyone else doing this in like around the world? And it was like, okay, well, there's these guys in Japan, Metaplanet, but I can't buy that with where my pension is at the moment. Incredibly difficult to get hold of in the UK. Well, not incredibly, more challenging to get hold of. But there's no one in the UK doing it. Like, why is that? I don't understand. Sailor's been at it for 4 or 5 years. And we've only got like a handful of companies across the world. And, this was probably, by this point, maybe February last year, February 25. And then, interacting with Bitcoiners, like UK Bitcoiners on X, I heard about, so it was the guys that set up the Bitcoin Collective and the Bitcoin Business Network in the UK. They hadn't set those things up at the time, but they ran like town halls and, or they still do, and like spaces, regular spaces about Bitcoin. And suddenly there was one by this guy, Andrew Webley, and it was about the Smarter Web company and how it was going to do a Bitcoin treasury in the UK. And I was like, wow, this is pretty cool. And I got off the spaces, signed up for an AJ Bell account, which is one of the brokers in the UK that was doing the IPO. Sorry, the broker in the UK that was doing the IPO. And again, not a wealthy guy. I put in the minimum amount that you could, and then waited for IPO day. But at the same time, I was kind of like, what makes a Bitcoin treasury successful, or what makes a company successful, and is there anything I can do to help this gain some traction? And so my first thought was, well, there's nothing I can do. Who am I? And then my second thought a few days later was kind of, oh, I could set up a community on X and get the people who are interested in it talking about it. And, irresponsibly long MSTR is massive. The Metaplanet one was getting pretty big. That seems to be part of the recipe for success. I'm not saying the reason, but part of the recipe. So I had to upgrade my X account. I didn't even have, I had like the free account, and started a community. And I thought, there'll be like 10 or 20 of us just asking each other questions and discussing what we thought was good, bad, ugly, whatever. And it kind of got wild pretty quick, and I think it made me realize, one, quite how many Bitcoiners in the UK there actually were. Being in the southwest of the country, it's kind of like a lower population part of the country, so you don't interact with Bitcoiners that much, and it kind of exploded. And I think a week in, past the IPO, or even it might have even been a few days, everyone was like, oh, you should organize a spaces so we can all chat about it. And I was like, okay, brilliant. I did that, and um, Andrew Webley and David Beatty turned up on the
So
space.
they just popped in.
Yeah, I was like, oh, okay, cool. Now I've got to like ask questions and stuff, which was not. I hadn't. There was no prep for this. I thought we were just having like a group discussion about smarter web, and then yeah, it kind of snowballed from there. I think I did one more spaces, and then people were like, we've got to do video, so then it moved to video, and kind of here we are. I don't know how many episodes I've done now, but
Yeah.
it's good.
So that community, do you remember when it started? Because I want to, if I had to guess, I want to say maybe probably end of March or April.
It was either the very end of April or yeah, it must have been in April. Um, so yeah,
So not even a year yet. Yet it
no.
feels like a long time.
Well, a lot's happened in that time, right?
It's so much has happened. Can you actually, I guess that's a good segue. Can you give, it's going to be hard, I know, but let's go to the pre-IPO. Was that like around February or March?
So I can't remember the exact dates, but I know the actual IPO happened on the 25th of April. And so I think it was maybe 10 days before that I heard about it. So let's say 15th of April, somewhere around there.
Okay.
And yeah, it's all a bit of a blur because everything just happened so quickly. And Andrew just blew it out the park with equity raises, and every week there was news, every week. So it was really easy to do what I was doing, which is talk to people about it, ask
Yeah.
questions, because there was so much going on. And it was really exciting times, really exciting times.
Did you ever have any exposure to strategy or micro strategy at the time?
Well, yeah, just for a short period, because I wanted to get my pension exposed to Bitcoin. That was in the UK, it's really difficult to
So
get
that was
exposed.
your best exposure was strategy, and then you shifted to smarter web.
Yeah, so I think it was 10 days after IPO or nine, something like that. Hargreaves Lansdown, where my pension is, again, broker, they brought Smarter Web online so I could buy it through my brokerage account. And by that point, I'd listened to the spaces with Andrew on. I'd spoken to him directly on a spaces. News was coming out, and yeah, so I just switched it all to Smarter Web, sort of 9 days after
Just
IPO.
went all in like all on black. You just pushed all your chips over.
Pretty much. I mean, I felt like I had enough of a measure of the man to decide that he was fully committed. This wasn't just a bit of a punt. He was all in. And I believe in Bitcoin, so that was a tick. And I kind of, yes, it was risky. I'm not going to pretend it wasn't risky. And it was, some would say, a complete gamble. But I was looking at it from a basis of MSTR being the Leviathan, right? They're huge. They're swallowing up Bitcoin, but also in percentage terms, what they're swallowing up is getting smaller because of the size of their stack, right? So their growth potential was a lot less than Smarter Web. Smarter Web starting at basically zero. Their growth potential was off the charts, but more risky. So yeah, I took the punt, and it's worked out all right.
Can you give as best you can the most important highlights of smarter web from IPO until where we are today? I'm not holding you to a detailed forensic account, but just the best that you can, because I feel like you're probably one of the best historians, I guess we could say,
Okay.
for smarter web.
Oh damn! I wish I had it all in front of me. The best I can probably do is more of a description of that first. I think it only lasted like 8 weeks or 9 weeks, and it was kind of every morning waiting for an RNS, which is like the regulatory news service. It's how companies are supposed to publish market sensitive information in the UK. And Andrew basically set up a framework of he wasn't going to do a sailor where it got announced every Monday. This is the Bitcoin buy. He wanted to keep it interesting, not for the sake of being interesting, but just so people can game the system and stuff like that and trade off it and things. But most of the important news would happen at 7 a.m. UK time, and that'd be Bitcoin purchases or the amount that was raised in a raise would come out at 7 a.m. and other sort of information. But then at between 4:30 and 5:30 p.m., after trading had closed for the day, we'd all be there with bated breath, waiting for another RNS saying that they were going to open another raise round. And in the beginning, retail got to participate in that, which was just super exciting. And each time, so each week this was happening basically every single week. I think in the first 8, maybe there was 1 week it didn't happen, but retail could get involved. You could say how much you wanted to commit, and you could buy your shares directly from SWC, and with that money they went and bought the Bitcoin. But each week the amount that was raised was going up, and so the amount of Bitcoin was going up, and it was just compounding at such a rate that it was just insane. And that really, with my money that was outside of my pension, was the point. Because why didn't I just buy Bitcoin? Well, because I'm not a wealthy person. I don't earn a huge amount of money. So my DCA at these current prices, which at the time was 100k or whatever, is barely making a dent. I'm not adding significantly to my stack anymore. So now, if I can find a way to speed run that, I'm going to be interested. And if someone's able to compound that for me on my behalf by me buying and holding something or DCAing into that, then I had the ability then to start making a dent again. So the aim is always more Bitcoin, right? Right. And for me, this was the only way to make that a sort of a meaningful investment.
Those first 8 weeks, I remember being on vacation. I think it was in June. I think it was like mid-June. And I see $9. And I'm like, what? No, this can't be it. I think it opened the day at I don't know if it was $4 or $6, and it ran up to $9, and it quickly dumped back down. And that whole weekend, it was a blur. I actually, honestly, it was fun for me, but I do regret because, I was like, my mind was not on vacation. I think up until maybe July was probably peak. From March, April to June, July was definitely peak Treasury company era, or phase 1, let's call it. And since there have been some moments, but it's been pretty painful. So we're in the phase where it's harsh, but it's all driven by Bitcoin's price action. So whether you believe in cycles or you don't believe in cycles, or you believe in the power law or you don't believe in the power law, or plan B or not plan B, the reality is that we were at 126 a couple months ago, maybe at 4 months, 126,000. We're currently at 68,000 or so. Pretty big pretty big correction. But I guess my question for you now would be, is your thesis in Bitcoin, since you've been orange pilled, has that changed at all? And following on that, has your Bitcoin Treasury thesis, is it still the same or has it shifted?
Yeah, so not much is the short answer, but when I think about that 2018 drawdown in Bitcoin, and I remember feeling physically sick, genuinely, just watching the numbers tumble. It was awful. And then I think about treasuries. It was June 19th, right? Was the peak for SWC. I remember it well because it was a really sunny day. I'd gone down to the pub at like 3 o'clock Friday afternoon.
You're like, all drinks on me.
I'd met a fellow SWC investor, and I just kept checking my phone. Like, I was refreshing the page, checking my portfolio, and I was just laughing because it had got just ridiculous. And that should have been the message to say, maybe you should just like trim some off here. But I didn't. And that drawdown, which I think at one point was like 95% drawdown from peak to trough, that came second to the 2018 Bitcoin. It's like, I believe now in Bitcoin, so I'm not worried about the base asset that I'm invested in. I'm invested in a company that hasn't taken like ridiculous risks. It hasn't loaded up its balance sheet with debt. It hasn't got like ridiculous convertible bonds and all that kind of stuff. So actually, provided they can weather a Bitcoin winter, then it's game on again when that comes around. And that's kind of my thesis, is that, do I think Bitcoin's going to die because it's having a bear market at the moment? No. Do I think Smarter Web is going to fumble the ball? No. And they don't have any, like Saylor. I know this in hindsight now, but he had that silver something or other debt that was a bit of a problem for him in the 2022 bear market.
Yeah, the Silvergate loan.
Silvergate, that's it. Yeah. And he managed to pull that off, and all was good. But when I was looking at Smarter Web, it's like, well, they don't have that. So as long as they can keep the lights on, then nothing's changed.
They do have that. They do have a convertible bond, but that it's denominated in Bitcoin, though, right? And is that? I think that was only a 12-month loan.
Yes. So they did that in August, and it's a 12-month term till this August, and they may have to give that Bitcoin back. If I think the share price is going to be at 1.95 or above, £1.95. So I don't know what that is in dollars, but that's, I don't know, $2.60, something like that. Mm-hmm. No, that's not right. Yeah, that's right. $2.60, something like that. I'm not here to say that will happen, that won't happen, but I think it works out as about roughly 10% of their Bitcoin, so about 250 Bitcoin, something like that they would have to return, should they not meet the terms of that. But it's not like they're getting margin called on some massive debt that is going to obliterate half the stack or make them be forced sellers of Bitcoin. This is just returning the bond.
Do you think the Flywheel is still valid, or do you think it's shifted and now the strategy, and I think Strive have preferreds? Do you think a company has to be big enough that they have to have these other vehicles to be successful, or can we just go back to just the simple flywheel?
Um, Great question. I think my, this is my personal view, so I don't know if I'm right or not. But let's take a step back. So I think cycles are a thing, and I'm not talking about halving cycles in Bitcoin or anything like that. I'm talking about like market cycles. They are a thing. They they repeat all over different markets in different parts of the world. The S&P 500 has a 4-year cycle, um, and gold has an 8-year cycle, and the Dixie has a 3-year cycle. There's cycles everywhere, and one of the things that cycles do is they reset sentiment. Okay, so you go all the way up to euphoria, and then all the way down to like fear and despair, and then the cycle resets, and off we go again. And part of that sentiment reset, it affects people sort of psychologically, and it means that when you get to a certain point, oh, here we are back at euphoria again, but yet we know how this ends, and yet people are still buying the top.
Yeah.
And that's how the euphoria happens.
Look at silver.
Yeah, and with a bear market, sentiment's in the toilet, and people are like, "Oh, it's over." But we know that's not. I mean, okay, some companies do go under, but we know that's not how it ends. These things come back again. So the flywheel is reliant on sentiment in order for it to spin, and it's my personal belief that sentiment will return to the sector. More than likely, it'll be just before Bitcoin starts turning up again, because strategy-led Bitcoin. I can't remember by how many days, but it turned up just slightly before Bitcoin did, and I suspect treasuries will probably do the same again. And then the flywheel's back. Maybe it doesn't get as crazy next time. Maybe, I can't remember what the peak was on Smarter Web's MNAV, but it was in the 20s.
I think it was over 20s, yeah.
And
it's pretty wild.
Yeah, it's mad now thinking about it. But maybe they tap out at 2. Maybe they tap out at 5, maybe 7. I don't know. But if it's above 1, then the flywheel works. And so, yeah, I think it does work. And I think there's more institutional interest in treasuries, even though we're in a bear market. I think the education piece that Saylor's been doing, and the likes of Andrew Webley and Dylan Leclerc and Simon Jerevich, they've all been educating institutional investors, which means they're going to want to get a good deal when the time is right and all that kind of stuff, right? So that will be part of the next flywheel spinning up, in my opinion. And then, prefs. I kind of flip-flop a little bit on prefs. I'm not saying I could come up with anything better, because I absolutely couldn't. But what we're seeing is they're like seasoning, or they're earning their place at the moment. And on the face of it, it's going pretty well. The likes of Stretch coming back to par every month, or very close to par every month, is a sign of that. Bitcoin's been tanking since October.
Yeah.
And yet, I don't know, last time I checked, Stretch was at like $99.7, which is phenomenal. So that bit works, or is working. And in my head, that bit only grows as interest grows, and maybe strategy get a better credit rating, and all that kind of stuff. I guess the thing that really bugs me about about prefs is the collateralization and how you maintain that. So I don't know what the current figures are, but let's say you wanted 5-to-1 collateralization. So you've got to have you've got to have $500 of Bitcoin for every $100 of stretch that you sell, right? Which means if I sell $100 of stretch, I've got to sell $400 of common stock in order to maintain that level of collateralization, which puts a hell of a pressure on the common stock. As the interest in this, the stretch, grows, can the common stock support that? I mean, maybe it can. In a Bitcoin rising market, that's going to be no problem. But I think we're in a bear market right now. And, Saylor's been hammering the ATM, which is, he wants to accumulate more Bitcoin. It makes sense. But close to 1, if not 1 MNAV, which on the face of it means that the common stocks sales haven't been accretive. They've been
right.
I can't even think what
it's dilutionary.
Yeah, they've been diluting, right? So
yeah.
But when you add in the $100 of stretch, then it is actually accretive. And I don't know. I haven't deep dived into the maths, but it bothers me that kind of collateralization and the amount of pressure that it puts on the common stock. But I haven't looked into the maths enough to weigh myself.
Yeah, I think so. I had this conversation with Mike Flom. He goes by Grain of Salt. So anybody who hasn't seen that interview, they should. For me, I don't like anything that's perpetual, especially debt. I get it, obviously. I mean, if you can earn that spread, if Bitcoin continues to earn, say, at the lowest, 15% per year, and you're paying 11%, obviously you have a 4% spread gain. The math to me obviously makes sense. It's just the what if. And Saylor has answered a lot of these what ifs by having a pool of money. I'm just very against debt in general, but I do understand why they did it. I understand that it's a tool. Mike Flom has said that perpetuals have been around, but it's not a very common thing, especially in equities. It was at the very end of 2024, but really 2025 was the preferred era. So strategy really changed as a company as soon as the preferreds came in. That original thesis that a lot of us bought into, it's different now. It's a different beast. So before it was some sort of a turbocharged engine. Now it's a rocket. And I do think that Saylor has the right team to figure it out. A little bit of caution is where I'm at. And I don't know if that makes sense with you.
Yeah, for sure. And I think that's why the collateralization thing bothers me, because like what is this going to do to the common stock? And I haven't put in the hours to work it out yet. But the thing I think about with regards to strategy and their prefs is that if you're thinking about if you're considering about the perpetual aspect of them, right? Stride, strife, strike, I believe will end up being like rounding errors, because I don't think they're going to get big enough to cause strategy a problem when Bitcoin's CAGR drops to where it's in the danger zone of it costing them too much money. But also, strike, I think a lot of people will convert in the future, so that one will shrink in size rather than grow potentially. Stride, he does have the option just to not pay it, right? It's written there in plain English.
Yeah,
I think Stride's the junk one, isn't it? Yeah.
STRD. Yeah.
And then so really it's stretch that STRC that is the elephant in the room, right? Because it does feel like it is his iPhone moment. It's the moment that he created a product that the world is actually going to buy and in quite some quantity. But it's variable rate. So he can just drop the rate as Bitcoin's Kager drops. He drops the rate on stretch, and it eventually just fizzles out.
They're trying to peg it to 100, to $100. I think there is a base. I don't think it can go below the Fed rate. I don't know what it is right now, but let's say it's 5%. I don't think it can be. I forgot what the details are, but I think there is a floor to the rate.
Yeah. So okay, it's the Fed rate, but Bitcoin's Kager should always be above the Fed rate.
Yeah,
As long
as
as
long as nothing breaks. Yeah,
yeah, as long as they're printing money, Bitcoin's going to go up. And if the Fed rate's 5%, Bitcoin, I don't know, will be 7%. So they can just stretch it at 5 and just keep it there.
yeah,
Like they don't have to peg it to 100. They want to. That's their aim.
right.
But companies pivot all the time, right? So
That's true. Yeah,
when the time comes, when margins are too tight, it's just like, okay, now it's just a 5% bond effectively, or T-bill or whatever. Do what you will with it, kind of thing.
yeah. You mentioned just now companies shifting and pivoting. I know that Saylor has said that they're not ever interested in acquisitions, but I look at the smaller of the Bitcoin treasury companies, and I can't help, especially now with MNAVs being drastically low, and thinking that a lot of these could be acquisition targets. Do you see that happening? Do you think Smarter Web or others like Capital B or any of these might be targets?
I mean, never say never. I think there will be lots of M&As in the space. Strive have just completed the first one, buying similar. Their sort of like IP almost is that they've got the skill set, they've got the knowledge to go and do these M&As. So, I fully expect them to do more. Saylor has said he doesn't, it's a distraction. He'd have to employ people specifically to do that he doesn't currently have in-house. And that's his stance right now. Maybe that'll change, in the future when Bitcoin gets more and more scarce and, it's more and more expensive to acquire. Maybe that changes at that point and M&As come back on the table. I've been thinking of it more in the terms of, is Smarter Web going to buy anyone even smaller? And I get the impression that the risks and costs involved, it would have to be a really good deal. Just like legal and accountancy and advisors and all that kind of stuff that goes with it. And then potentially like making people redundant and all of that kind of stuff. That's not a quick, simple, easy task. So, I think they'd have to be trading it significantly below 1 MNAV to make that attractive. And, Smarter Web's back, I don't know what it is today, but around a 1.1 MNAV, which, isn't amazing, but it's it's not below 1. Which means that, there's stuff they can do below 1 MNAV, but, it makes life a bit easier if it's above 1.
What do you think success looks like for Bitcoin treasury companies, especially the smaller ones like Capital B and Smarter Web? What does success look like for them in the next 3 to 5 years? Is it just sticking to the exact same plan, maybe implementing some prefs? And what would you think is failure for Bitcoin treasury companies as a retail investor?
Okay, so I think the next 3 to 5 years are going to be pretty exciting. It might be a slow start because it's pretty challenging at the moment, but because 2 things are going to happen, right? One, we're going to find out whether prefs are as good as we think they are. Is there? Because let's go back a little bit. Sorry, this is a bit of a tangent, but I will come back to your question. Back around this time last year, Saylor was doing like $2 billion convertible bonds, and everyone was just like, "Wow, this is amazing!" It's basically free money, and all this kind of stuff. And then, there was a sting in the tail, and all the delta hedging and all that kind of stuff that went with it. It's like, oh, actually, there is a price to pay for this free money.
Yeah.
And now we get to find out if that's the case with prefs or not. And I don't think it's going to be the same. But the next 3 to 5 years is really where we get to find that out. And so, assuming that prefs are as good as we think they are, then that's got to be the aim for the likes of SmartWeb and Capital B. That's how do we scale to a size where we can do that and launch them in our respective jurisdictions, right? And meanwhile, there's going to be more and more small companies putting Bitcoin on the balance sheet. Maybe they're running the Treasury play, maybe they're not. Bigger companies, like you've got the Bitcoin miners, and they're pivoting to AI, right? Because it suits their business model, it suits their infrastructure, it gives them a bit of resiliency when Bitcoin's going down the toilet temporarily, and so it makes perfect sense. So there's going to be a lot of change in the next 3 to 5 years, I think, and it's not just about prefs. It's about Bitcoin, the global economy, because as a retail investor, to answer your question, I'll get there in the end. The only reason you would buy a treasury company over buying Bitcoin is either because it's trapped capital that you can't directly buy Bitcoin. So in the UK, like pensions and ISA savings accounts, or it's because you believe that company is going to acquire more Bitcoin per share, and therefore you are going to outperform Bitcoin with that money over a long enough period of time. And I'm not saying everyone should go all in on treasury companies. I think spot Bitcoin first, cold storage is the answer. But I think the quote that stays with me, and it's actually from Jesse Myers from Smarter Web. Well, actually, it's Saylor, but he said it to Jesse, and Jesse is the one that told me. And he said it on a bunch of podcasts. If Bitcoin is the risk-free rate, right, and your entire net worth is in Bitcoin, then your whole portfolio has no risk in it. And so there must be room in a portfolio for some risk. And and that kind of stuck with me. It's like, yeah, I've got my Bitcoin. I wish it was more, but there's room in my portfolio for some risk. And that's, for me, Smarter Web.
I think that's perfectly said. For me, it's the same thing. For me, it was purely in a Roth IRA. And it was that same thesis that I think a lot of people are forgetting, because it's trapped capital, or you try to outperform Bitcoin. But that's dangerous. Strategy itself almost hit $100. I think it just tagged under 100. It was about $100 from just a couple of months ago. It was at 460, 470. What you were saying about having a drawdown of like 95%, that is not for everybody. That is definitely not for everybody.
Yeah, and I think, everyone's like freaking out. Oh, MSTR tagged $100. And it's like, well, yeah, but go back 4 years and it was like $12.
Yeah.
Right? So in 4 years, you've gone from $12 to $100. Like, there's not...
I'll take it.
Yeah. There's not many opportunities in the world to do that. And, sure, it was $500 not that long ago, but you still ended up on like a, what's that, 7x or whatever. I'd say that's pretty good going.
I
From
totally
I don't
agree
know,
with you.
maybe it goes down lower, but if you're measuring low to low, that's pretty awesome. And that's the thing with Bitcoin as well is I often just look at the chart with the 200-week moving average and just look at the curve on it and
Yeah.
go to the monthly time frame, and you just get this lovely line that just goes like that, that's sweeping up, mostly underneath the chart. And it's like that is the trajectory. This is where we're going. And it's just such a nice way to remind yourself that, ooh, it's dropped 50% from all-time high. So what? You know, last bear market, the bottom was it 16K?
Yeah. Just under, yeah.
And now it's, I don't know, maybe it drops to 50K, but that's still a triple in
Yeah.
4 years, and that's considering that this bull market has been lackluster, a bit disappointing,
Yeah.
for many. I don't think that's going to be the case next time. The macroeconomics that's lining up, the time that takes to get into the system and convert to gains in risk on assets means that the next bull run's looking pretty tasty.
How's Bitcoin in the UK in general? What's the vibe in the UK for Bitcoin?
Okay, so I would say the Bitcoin community is relatively small, but it is growing, which is good. I would say that the general public's consensus on Bitcoin is that it's a scam, or it's gambling, whatever. I wouldn't maybe go as far as hostile, but mainstream media. Did you see that Financial Times article that came out at the weekend?
Yes. Yeah.
It's
It's
sixty
so
nine
crazy.
thousand dollars above what it's worth, or something like that. And that's what people are reading. That's what they're being fed. So, of course, they're not going to be, you know, jumping up and down, tell me about Bitcoin. But it is growing, it is changing. We're starting to get more events, meetups, all that kind of stuff. So it is an exciting time, I think. The biggest issue is that the government that we've got in place claims they want to be the crypto hub of the world, but done sweet FA to actually deliver on that. So hopefully with a changing government, we might start making some progress. We can hope anyway.
So I'm going to give you the time frame. It could be a year, 5 years, 10 years, whatever you want. Where do you see Bitcoin strategy, smarter webs price being?
Oh, okay. Firstly, I suck at price predictions.
Everybody does. Everybody.
So
It's like that. It's the Anchorman. I'm 60% right or whatever. It's 60% right every time.
yeah, I think I'd take those odds, but my likelihood of being right is pretty slim. But so MSTR, I mean, if it doesn't hit like $1,500 in the next 4 years, then I'd be shocked. But I don't follow it quite as tightly as I have done. I want to say 2,000 just because it's a round number, but smarter web. I mean, it's like take something that's incredibly volatile and then add more volatility to it. So we peaked the closing price in the UK. The highest closing price in the UK this year was £5 a share, and we're currently trading at it IPO'd at 2.5 pence, and
That's
it
such a
did that.
crazy.
It did that in 8 weeks. Okay, So what's that? That's a 400x, no, 200x in 8 weeks. Am I going to see a 200x in 8 weeks again with SWC? No, I'm not expecting that. Do I think we reach all-time highs in the next 4 years? Yes. Do I think we smash the existing all-time high? Yes. Okay, so if MSTR was like $500-ish at the peak, and I'm saying 1,500, that's 3 times. Yeah, I mean, I could see SWC 15 to 20 pounds a share, assuming the whole bull run happens, all that kind of stuff.
Yeah.
Bitcoin, I mean, it feels like we're on the precipice of the S curve, right? Where it just kind of just moons. And with the likes of Bitcoin treasuries buying up a significant amount of the supply, it feels like this cycle could be the one. But then Bitcoiners say that every cycle. So I don't know. Like I think my bearish top for this cycle is probably $350,000. But it could be a lot higher than that.
Do you think do you think this is the official bear market, or is it just a correction?
I mean, I'm here for both. So, if it's a correction, then great. We get to get going up again soon. If it's a full bear market, then okay, cheap sats for a bit, and we go again by the end of the year. It's just a time thing, right? So It's either going to be soon or it's going to be not quite so soon, but it's still not a long time. It's just let's go touch some grass for a few months.
Yeah. So the way I see it, if it is a bear market, you could say the bear market started in October. So we're already 4 months in. I think they might push it down to what you said, like maybe as low as 55, which would be I think the current 200 week moving average is about 55. I could see a crazy last push down to those numbers, or maybe 50,000, where everybody's like, okay, that's it. It's dead. That's it. We're going down to who knows what number. And that's when the shift will happen. Or we just base here for a couple more weeks or months. I really don't see how, especially with the move that gold has had. And not that I follow macro like crazy, but it's just there's so much going on and so much money printing. And with AI, I mean, I don't follow AI as closely as a lot of other people, but there's going to be a lot of unemployment. They're going to have to print the money for some sort of unemployment compensation, right? Or that could be UBI or who knows what. But that's going to be money printing. Where's the money going to come from? You can tax the robots, you can tax the AI, but you can only tax so much. They're going to have to print the money. So the thesis could take longer. It could take another year, 2 years, who knows how long. But they're going to have to print the money. That money's going to find its way into certain things. There's only a few things, right? Real estate, stocks, gold, silver, I guess, Bitcoin. And of all of those, for me, it's just a no-brainer that would be Bitcoin.
Traditionally, Bitcoin's bear markets lasted about 12 months. So we're 4 months in, could be 8 months. Right, that's kind of that's how I'm managing my expectations right now. It's like, that's cool. In 8 months, we're off. We go again, and whatever happens in between happens in between. Because do you know what I'm not going to start doing is selling my Bitcoin and hoping to buy back lower. Because what if it's tomorrow, or next week, or next month, and I'm waiting for October, and the train's left the station, and I screwed it right up. So that's the whole strategy, right? Is I don't need to time anything. I can just chill, wait it out. Time is my friend, and off we go again. So, yeah, I get to enjoy that this time and just sort of go, okay. If it pukes to 30K, I don't care, because I believe it will come back. And so therefore, it doesn't matter.
Yeah. That's a good way to wrap it up. James, thank you so much for your time. You're sharing your wisdom, your Bitcoin Treasury space expertise. Can you tell folks how to find you?
Sure. Basically, X at Our Good Life UK. On YouTube, it's at SWC and BTC. It's pretty much all just SWC content, but that's the two places you can find me. And hoping to be out there producing content throughout the bear market. And when that ends, it gets exciting again.
Yeah. Well, I think it'll happen sooner than most realize. All right, James, thank you so much for your time. I hope you have a great one.
No problem.